Okay, so very good evening and welcome to JC Academy. I hope you guys are doing fantastic. So students, today's session is slightly different, but it is very important as well. The reason being, number one, this session is going to be held in English. So the moment you say E and G in any of our thumbnails, you have to just understand that this session is going to be in English language. Now, at JC Academy, we've always tried to reach out to our students as much as possible. So this session is exclusively for those who wish to learn in English language. Also, today's session is very special because of a reason, because you guys would be expecting your results anytime soon. So I thought whether or not I should be having a session live or not because of the anxiety you guys will be facing. But what I understand is that the show must go on. So results coming and they will eventually come when they're supposed to come, but we should not waste precious time to learn. So the objective is that in this session, we will try to understand how union budget impacts India's foreign trade policy. Now, generally, as a management student, you should basically be having a good grasp of what happens in the foreign trade because unit number 9 pertains to foreign trade and international business. So, if you are a management student and if you're preparing for the upcoming UGC NET June attempt, so unit number 9 is very important. Now, in fact, these two units, units number 9 and units number 10, basically majority of questions in these units are framed around current affairs and framed around, latest government policy, rules and regulations. And that is why I have this important session for you. So in this session, we'll be understanding how this union budget impacts India's foreign trade, and I have got a 9-point input for you guys. In case you wish to join me or join our group for Telegram, this is the link and this is the handle for the Telegram group as well. Shikha ji, very good evening. Also, please do let me know if you can hear me loud and clear and if the audio video is perfectly okay. Also, please do let me know if the audio levels are good enough so that we can continue the session further. Fine. So today's agenda is very simple. We'll first have an introduction. I'm doing good. I'm doing good. We will also understand what do we mean by foreign trade, and we will go through 9 different points on which this budget impacts the foreign trade, and we will summarize the entire thing. So the estimated session time would be 35 minutes. One more thing. One more thing is that as and when I'll navigate through this session, I have highlighted some of the keywords in the yellow color. Now, the moment I've highlighted these keywords, now the responsibility is on you to note down these keywords. Why? Because all these keywords have been previous year questions in the last few sessions. So, it is very important for you to have a good understanding of these keywords. Although I'll be explaining these keywords in brief as and when we navigate through the session, but I would still appreciate if you note down these keywords, and then by the end of the session, you'll be having a list of 25-30 such keywords, and this will help you get a better understanding of this particular topic. So the union budget for the very first time was presented on a Sunday, and share markets were kept open on a Sunday. Our finance minister Nirmala Sitharaman presented it for the 9th time in a row, or isliye that is an important landmark. So now what is the objective of the budget? So as you know, the budget basically decides the fiscal policy of a country. So another key term for you is to understand what do we mean by fiscal policy. So generally, there are two policies which govern the economic well-being of a country or the economic development of the country. One is a fiscal policy. Fiscal policy is implemented through the budget, and finance minister is the person responsible. Ministry of Finance is responsible, and then there is a monetary policy. So monetary policy has been taken care by the Reserve Bank of India. So where fiscal policy talks about taxation, collection, revenue and expenditure of the country, monetary policy looks at easing out or maybe adding or removing liquidity from the market, thereby managing inflation at large. So this budget was focused on strengthening India's foreign trade. And as you know that for the past few months, there has been a withdrawal of foreign money from Indian markets. A lot of FDIs, FIIs have gone out of the country, FIIs have gone out of the country. And what has happened is that the emphasis basically was, the challenge was to strengthen India's foreign trade. So you know that US up till yesterday, now today we have a deal with US, but before today, US was penalizing our trades by tariffs, And we were also not doing really well in comparison to countries like Vietnam, Bangladesh, and other countries when it comes to providing services and goods at a better rate. So the challenge here was to strengthen the foreign trade. So the emphasis was on trade facilitation, MSME exports, and global competitiveness. So trade facilitation means we are trying to facilitate trade. We are helping importers and exporters grow their business. MSME exports is exports managed by micro, small, and medium enterprises. So micro, small, and medium enterprises, and these enterprises do export. And then in the last, it is global competitiveness. Now this term is very important. Why? Because when we talk about India as a global economy, we have to stay competitive in the market vis-a-vis to our global players. When it comes to India, India's peers are maybe China, maybe Brazil, and similar countries, right? And the objective of this budget was to align with Make in India, Atmanirbhar Bharat, and export-led growth strategy. So the objective was to push exports. Now we also do talk about foreign trade, and before the foreign trade, now these are certain areas wherein this budget is trying to help the economy grow. So what is the meaning of foreign trade? Now generally Ministry of Commerce is responsible for the foreign trade policy. So if Ministry of Commerce is responsible for the foreign trade policy of the country, why are we talking about the budget? It is very simple, because in the budget we talk about taxes, in the budget we talk about growth, in the budget we talk about investments. So budget basically aids or basically support a country's foreign policy, and that is why foreign trade is important. So when I say foreign trade basically refers to exchange of goods and services across countries. So this would include both exports and imports and trade agreements. Now these exports and imports are done with the help of these trade agreements. Now what are trade agreements? To put it very simple, trade agreements are a set of rules and regulations which have been agreed upon between two or more than two nations. In case it is agreed upon between two nations, it is a bilateral agreement, and in case it is done between amongst more than two countries, it becomes a multilateral agreement. So likewise, India and the US recently closed a bilateral trade agreement. Now trade agreements will basically decide on the rate of tariffs that will be done, the rate of quotas and taxes and other things and other nitty-gritties. So basically foreign trade is comprising of exports, imports, and how they will be done. This also plays a vital role in GDP growth. Now national income is generally measured in various ways. One of the key indicators is the GDP growth. So at what rate of interest our gross domestic produce is increasing, and foreign exchange earnings. Now foreign exchange earnings are very important. Why? Because this will help you maintain a healthy balance of trade. So if you have a positive balance of trade, you will have better foreign exchange earnings, and foreign exchange earnings will basically help you have better foreign reserves. So if you supposed to buy oil, or if you supposed to pay somebody for a defense equipment, you will be needing this foreign currency, and thereby you need better foreign exchange earnings. So I think this is understood. Now I will take you through 9 different pointers, and now these are the excerpts from the speech of the finance minister, and these are the direct excerpts from what she has mentioned in the budget, and I've tried to simplify all these points in the summary. So I will read this and I will try to make you understand what basically it means in a much simpler way. And I am also sure that you guys are noting down these highlighted words, because they're very important from unit number 9. So enhanced customs and trade facilitation reform. So it is basically saying that we are trying to facilitate trade and customs. So we are trying to reform our ways in which we take care of customs, and we are facilitating trade. So we are introducing trust based technology driven customs regime. So what we are doing is we are trying to, maybe in the future they will try and have a list of all the exporters and importers who got a good reputation, and they will basically give them certain advantages, and it will now be more technology driven. So they are trying to introduce technology when it comes to clearing a cargo. As you know that whenever we export something, it needs export clearance. So a team or maybe an empaneled member would come and then would invigilate or would basically inspect all the exports and then give them an inspection certificate, and only after that you can export your products. So inspection certificates will basically be more made more convenient and easier by introducing technology over here. This is what is meant. Now they are also talking about a single digital window. A single digital window means wherein you are expected to get multiple permissions and multiple OKs and multiple agreements and multiple licenses. You will try and get it at one single point of time. So different permits and approvals or whatever needed will reduce documentation barriers and attract global supply chain players. Why? Because this is going to significantly reduce their time. So if technology is involved in scanning, technology is involved in single window operations, it will bring down the time needed. So the entire time needed for you to export a product or maybe import will come down. So the impact is faster cross-border movement, better predictability and fewer informal costs, and you will become more competitive for exports and imports. So you are using digital systems and risk-based checks. So wherever you think that the risk is high, you have checks and measures over there. Wherever you think that you analyze the risks are negligible, you will be making it very easy. So paperwork is reduced and fewer delays at ports. Why fewer delays? Because you're giving a single window, okay, and that will why it will bring down, and the goods will move at a faster pace across borders. This will reduce the time and cost of exports and imports. I hope this point is well understood. Keep giving me a quick yes in case you're able to keep up with the pace and in case you're able to understand. I have tried to decode this and I've tried to basically, put it in a way wherein it becomes easier for you to understand as a management student, and you will be also be able to relate to your subject, that is unit number 9. So unit number 9, you extensively talk about import and export documentation, you talk about import and export procedures, you also talk about tariffs, you also talk about quotas, you also talk about duties, you also talk about anti-dumping, you also talk about various other checks and measures, right? And that is why I've highlighted all these points. Now, let's move further. The second point is that the budget also helps you in simplification and modernization of customs procedures. So, whenever you are exporting anything out of the country, it basically needs a customs check. The customs basically ensure that all the duties have been paid. So, you're not saving on any duties or taxes which are to be paid to the government, and you're not stealing, or you're not, cutting corners to save taxes or duties. So, customs department will check that you've paid all the taxes and duties. So now there is a term called duty deferral extension. So what is a duty deferral extension? Suppose you are importing something from US to India. So you're importing a product. So whatever product you're importing is basically requiring you to pay an import duty. Since you're importing it inside your country's boundaries, you will have to pay a tax. Now the government says that we will give you an advantage of a certain time duration. So maybe 3 years or 5 years or whatever. So what they are saying is that you can pay this duty not today but maybe a little later, as in when you receive the money. So this is what is meant by deferral. Deferral means something which is to be done today, we are allowing you to get it done a little later. So we're giving you a time extension in a way. So this is a kind of a time extension for the duty to which is to be paid to the government. And risk-based electronic clearance, so already spoken about in the previous slide, will ease short-term working capital pressures for trading firms. So if you're an importer, you will basically save, we will have some funds over here because you are being given some flexibility in paying the duties. At the same time, your working capital will ease out. Now, expanded non-intrusive scanning. Now, non-intrusive scanning means this is somewhat similar to when you go to an airport and you put your luggage and there's an X-ray machine, and the X-ray machine without opening the luggage gets to have an understanding of what's there in the luggage bag, right? So somewhat similar, what they're trying to do is that they will want to be having an automation, and they will try and include non-intrusive scanning wherever possible rather than physical inspection. So physical inspection is you basically opening up the entire cargo and checking it physically. So they are saying that we are trying to reduce this as much as possible. So this will help what? This will again help lower the logistics cost and improve reliability for exporters and importers and a win for export oriented sector. So you are giving a longer validity for advanced rulings. This is the difference we're talking about, and it is becoming more clear and predictable trade regulations because the transparency is there. So exporters can plan better and avoid unnecessary disputes over here. Now, the third point is that the budget also removed the 10 lakh rupee cap on value per courier consignment. So many a times it happens that if you are an artisan, if you are making some hand woven items or if you're making pottery, likewise in Rajasthan you tend to export blue pottery, and other places you export carpets and other things. So either you export them or you can just courier them. So if the item is small and can be put in a box, you can directly courier it. So up till now, there was a limit of 10 lakh rupees on a per courier consignment. So the limit also has been removed now. So there is a removal on value limitation on the courier export. So that is done away with. So this will help small artisans and MSMEs to send higher value consignments abroad easily. That is it. So that's the summary of the third point. Now let's move on to the fourth point. Now what they are saying is that they are shifting from export subsidies to risk mitigation and market support. Now this is a very important point. Whenever I say export subsidies, it means that the government will be putting in money from their own pocket. So you're basically helping exports in a way. So export subsidies is wherever you're supposed to pay taxes, they will probably lower down the taxes for by a certain percentage, thus thereby giving you a kind of a direct monetary benefit. So now the government is saying that instead of giving you such export subsidies, we will shift from this to risk mitigation. We will see as and when the case be, and the market support will be there. So traditional interest equalization schemes are phased out and subsidies were restructured. So subsidies will be given only in necessary conditions. Export support is now more focused to export insurance, trade compliance support and market diversification. So wherever exporters need help pertaining to getting their exports insured, wherever they are figuring out how to get compliances on board, wherever they are trying to diversify to different countries, government will actively help them. So they are saying is that we will not give you monetary benefit, but we will give you benefits in other ways. So government, so it is in easy way, it is saying that we will not be giving you benefits in cash but in kind. See it that way, right? So the government has consolidated multiple export incentives into export promotion mission. So this is important. So different export incentives will now be clubbed under export promotion mission to provide finance, compliance, help and market access. So this shift emphasizes sustainable export growth. Why sustainable? Because giving money, a subsidy in short term will not be, fruitful. You must have heard of this phrase saying that if you give a man a fish, he will feed himself only for one day. But if you make him learn how to fish, it will feed him for the lifetime. So this is the thought process behind it. So protecting against global volatility rather than subsidizing costs. So the focus is less on export subsidies, but more focus is on insurance, finance, and market support. So this will make exports more stable and World Trade Organization compliant. So the key word over here was export subsidies and risk mitigation. Risk mitigation is wherein we are putting efforts to bring down the risk. The fifth point was MSME export ecosystem strengthening. So this scheme, credit guarantee scheme for exporters, this has been asked multiple number of times in various PYQs. So credit guarantee scheme for exporters, what does it basically mean? It basically, provides almost up to 100% guarantee coverage for additional working capital and term loans. Suppose there is an exporter and he wants to export something and he is falling short of some money. So he wants some working capital or he wants a certain loan. So you will be supporting him. And those loans and those working capital will be collateral free. Collateral free working capital mean that in case an exporter needs a working capital, we will be helping him without any guarantee or without any security against that funds. So up to significant, but it is to a certain limit, critical for scaling up exports. So the impact is very simple. Major exporter segments like textiles, handicrafts and food products will gain easier finance, boosting foreign sales and competitiveness. So the exporters, it will become easier for them to get finance, get money, and this is basically that they are pushing this particular scheme. The sixth point is very crucial. It says sector specific export support. Now what they are saying is, suppose you are supposed to import something. Suppose you are a textile manufacturer or you're making some electronic goods and you need certain kind of specialized machines. So we will be doing away with the taxes and the duties on those imports. So the import duties will not be charged. As simple as that. So focused incentive for labor intensive export sectors. Now this is very important. They are saying that we will be focusing incentivizing all those businesses which will be labor intensive. Why? Because they will give employment. So if you're if you're like exporting seafood, if you're exporting footwear or leather items which need a huge amount of labor, so we will be supporting these kind of exports. So we'll provide relief amongst global tariff pressures, because recently these products were, tariffed very heavily by the US government. So the duty relief on inputs and capital goods were given, and supports was specifically given to textiles, electronics, seafood, and leather, etc. This will improve global competitiveness of the Indian products. Seventh point was lowering tariffs on personal imports and consumer goods. So this might not directly impact the overall foreign trade, but this will surely going to be help importing things. So the duty has been slashed down from 20% to 10%, and you are basically giving an exemption on cancer and rare diseases. So some 17 odd medicines have been exempted. Exemption means it is zero taxes. So there are no taxes on cancer related drugs and medicines. So cheaper imports of medicines and some consumer goods. Eighth point is you are now trying to respond to the global trade headwinds. Now, what do we mean by headwinds? Headwinds are basically scenarios or external environmental factors which are not in your favor, which are working against your favor. So, US increasing tariffs is a headwind, right? So, what they are saying is that we are preparing this budget keeping into mind that we are facing tough challenges in the global economy, in the way we do trade these days, and to respond to such headwinds we have come up with this particular approach. So the measure was to counter persistent tariff pressures, because US before today US had higher tariffs for India, and we were trying to, we were facing challenges there, and the idea was to simplify duty free imports of sectors like seafoods and maintain export margins in hostile tariff environments. Now, what are hostile tariff environments? Now, these are the environments where your products are being charged more heavily. When suppose if Vietnam is exporting shrimps and prawns and they have been taxed at 10%, and if India is now exporting shrimps and prawns, the same country is charging them 20% taxes. So it is hostile, right? So you are maintaining global market share for Indian exports in the face of punitive tariffs. So that's it. And the last point is improved government insurance and trade defense. So we are now focusing more on export insurance. So increased allocation for trade remedies and trade defense. Now, what are we trying to explain? What the budget is saying, that we will be putting in more money. A larger chunk of kitty, the larger chunk of business of the money would be allocated for trade remedies and trade defense. So what are trade remedies? Trade remedies is to counter dumping duties. So if some country is dumping their products over here, so you can take corrective anti-dumping measures. So you have funds for that, and you can also safeguard the actions, shields domestic exporters from unfair competition. So it become more robust mechanisms. So protecting against dumping and unfair imports. So all these highlighted words I thought would catch your attention, and you should now, since you now have some decent understanding of how the budget connects to the foreign trade. One more reason I'm coming up with these sessions is that you never know, you may have a comprehension or a case study around this. So you should be familiar of these terms. You should also be aware of how one action in the external environment impacts the second thing, that is the foreign trade, and also impacts your studies. So as a curious student, I would always appreciate that rather than sticking to a specific book or rather than sticking to a specific syllabus, you guys should always focus on keeping your eyes and ears open and then paying attention to such things around you. Because once you learn these concepts, or rather not learn, once you grasp these concepts through these news items or things happening around you, your understanding of such things becomes more clear. So instead of coming and just telling you what a duty is, what dumping is, I am giving you live, and these examples will basically be retained much better in comparison to what you'll be doing when you're studying from a piece of paper, right? So that's the entire picture behind me. So you can take a snapshot later, and then I'll share this PPT if you want to. I'll share this PPT in the Telegram group. And in case you wish to prepare with us for the upcoming June attempt, you can do that. You already started a live batch. Paper 1, Paper 2 combo is also available, and if you only want to go for Paper 2, that is also available. One more thing that we also do teach in English, as you must have been able to figure out by now. So we also do have a complete recorded batch, all 10 units of Paper 2 in English as well, that you can avail. That's the course to go for. I hope you like this session, and all the very best for your results tomorrow. And I'm going to see you very, very soon again. Rest of the details for the batches and the courses are flashing behind me. You can also check out the details in the description. Links are given below. All the very best. Bye bye. God bless you. Take care.